It's the Black Real Estate Dialogue. Tune in. Tune in. Tune in. Tune in.
Hi, everyone. Welcome to another episode of the Black Real Estate Dialogue podcast. Before we get into the show, definitely make sure you subscribe. Make sure you hit the like button, share if you're on YouTube. If you're listening on audio, make sure you subscribe on Spotify, Apple, or wherever you're listening to this at. Leave us a 5-star rating and review. I'll definitely give you a shout out. So I look forward to hearing from you soon. Live in LA for another amazing episode. Here with me, I have Nick Gouché, the co-founder and senior vice president at Legacy Home Loans, which is the largest Black-led mortgage banking company in the country. So Nick, appreciate it, man. Thank you so much.
Thank you, brother. You've done a great job, built a great brand, and I'm proud of you. Good work.
Thank you. Appreciate it. So before we jump in, let the people know who you are a little bit more and what you do, and I guess your history in the industry.
For sure. So I had to come pull up because you're in my city.
Yes, sir.
I'm from LA, born and raised, Crenshaw and Adams. My mother, had me and my younger brother, teenage mom. And so we grew up in South LA. Moved around a lot. Mom was looking to get us into a safer neighborhood every year. And so from kindergartner through my senior in high school, we moved 20 times.
Wow.
So a lot of displacement, a lot of lack of stability showed up in my childhood upbringing. And so that did have an effect on me for sure. But like most great people, you manifest over time through willpower and through the sheer determination. That was my, platform. And so raised myself, over time, went to college, got a background in finance, got in real estate young, 19, 20 years old.
Wow.
And I think really for me, that childhood part played a big part because when I got into lending in 2009 as a loan officer, being able to have impact on family was very so much at the crutch of who I was as a person because of my own experience. And so I think that level of connection with most families really created a connectivity with people. And so in a short while, it took me some years, but I became one of the top mortgage bankers in the country. I was published in every magazine, Scotsman's Guide, Mortgage Exec Magazine, NAMBA, every mortgage publication recognized me as a top 1% mortgage banker in the country for 4 years, 2015, 16, 17, and 18. And so I've been serving ever since.
Wow. Amazing.
Yeah.
Amazing.
Cool.
We're definitely going to make sure we get into that a little bit more.
Absolutely.
So the big news, what you've probably been talking about around the clock the last month. So Legacy Home Loans has recently come out with a program exclusively for Black homebuyers, which includes a 1% down payment. There's been a lot of questions. I'm sure you've gotten a lot of questions.
I have.
So give us just a high level overview of some of the details of the program.
For sure. And if I could kind of pull that back,
please do.
Some of the curtain.
Please do.
Because I really think what it speaks to is Legacy Home Loans is crusade. Okay. Legacy Home Loans was founded by my partner, Ben Slayton, who you guys know went viral. Ben, one of the first Black realtors in America in 1964. And in 2017 of September, there was a report that was published called The Road to Zero Wealth. It was published by a think tank out of DC. And that think tank report said that at the way that the wealth gap is increasing in this country, by 2053, Black families are on the verge to have negative wealth.
Yeah.
Zero. That was the fire that started Ben's journey to want to do something for his community, for his people. And so for the last 4 years, we have been committed to solving this problem at scale and trying to find every tool possible to solve this problem. So to this program, SPCP, 1% down payment program. So essentially, there is a law that was created in the 60s, right around fair housing, ECOA, 1968. There was a time before integration, civil rights, where they were working on a affirmative action bill. Lyndon Baines Johnson was LBJ. And so in the fair housing bill that basically said you cannot discriminate based on, age, race, sex, nationality, those are all protected classes. But in that rule is another law called the Special Purpose Credit Program, SPCP. This program says that legally you can create credit aimed at serving a underserved market or race that have been historically marginalized or received unfavorable loans over the years.
Right.
That law has been existing for 50 years. However, over the last year and a half or so, the federal government has been truly looking for every tool possible to encourage lenders to create programs to solve these problems like the wealth gap that exists in this country.
Right.
And so we, like most other banks, are taking advantage of this opportunity.
Right.
The difference is we're the first company that was bold enough to say, we didn't say multicultural.
Yep.
We didn't say diverse. Ben's thinking was that we want to provide the resources for the people who need it the most.
Right.
And historically, there's been no one more boxed out of wealth by design than our community. And so what we did was we said, okay, how can we help solve this problem? And so if you guys know of like redlining that's taken place in the past, most people know what that is. Well, if you look at the maps today, you would still see, if you look at where Black people normally live across the country, they're still in that red map today. And so we said, okay, these are problems that we have to help solve. And so what we did was we created a program that said, okay, we know that there are some group of the Black population who might have the credit potentially, who might have the job history, but they may not have the down payment.
Right.
How can we help? But we also said, well, let's look at what happened during the bubble of '08, where the average Black was, so the Black community lost 50% of all our wealth in this country because of foreclosure. So Black people were 70% more likely to be foreclosed on than any other group. And if you look at the why and how, most people who put down zero, no skin in the game, were most likely to foreclose on a property.
Yeah.
So we said if we can just maybe have them do a 1% down payment, so they have something invested, we'll give the other 2% of the down payment.
Oh, wow. So you're actually giving.
We're giving a 2% grant.
Wow.
Correct. And so we focused on 6 cities as a test and learn market that basically had a 51% or higher Black population, where the mortgage housing cost was equal or close to the rise in rent in that market, and that had affordability.
Right.
And so we looked at Memphis, Chicago, Detroit, Philly, Atlanta, and Baltimore.
Got it.
As those 6 markets. And so that's what we did.
Perfect. Man, lots to unpack. So for those who are not familiar with redlining, or maybe they've heard of it and don't really know what it was, can you explain what that is?
Absolutely. So let's fast forward back 100 years ago. 1929, the Great Depression takes place, and FDR is now our president, and he comes out 4 years later, tried to restore America. And what he does is says, okay, we need to be able to unleash capital in the marketplace to restore the pride in being an American. So we need to do that by helping Americans become stakeholders in America.
Right.
So they can believe in capitalism. How do we do that? Homeownership. So in 1934, he created what they called the New Deal for America. They basically unleashed capital to Americans to become homeowners. So before this time, if you went to buy a property, you need to have a 20% down payment, and the terms were like a 5 or 10 year payback. So most people could not afford to own a home. So before 1934, there was basically the working class and the upper class. There was no middle class that existed.
Yeah.
So that helped create the middle class. They said, okay, let's create rules around who can actually get this money. So they created the Federal Home Loan Association under the New Deal that basically had appraisers say who can have access to this low interest credit, like an FHA, 3.5% down payment, what have you. And so they basically looked at maps that they determined to be risky neighborhoods to lend. Just so happens those risky neighborhoods were Black neighborhoods. And so they basically drew a literal map and they redlined, basically like a stop, like at a red light, don't lend in those markets. Yeah. And so if you, at that time, Black families were married at a higher rate than white families. So if you were both two working, middle or hardworking Black people with the same credit capacity to afford, you could not go and get access to that program because you were in the wrong map. And that's literally how they created suburbs.
Mm-hmm.
It's how they essentially created white flight, where they allow white individuals, white families to leave the inner cities of America and left black people with limited resources and limited access to credit.
Yeah.
That was redlining.
Yeah, it's interesting because it seems like it's a reverse. It's a different trend these days. We see it in LA. I mean, I know you see it.
Yep. No, it's true, man. It's like they say there's nothing never new under the sun.
Oh yeah,
right. It just gets repackaged.
Yep.
And so yeah, we definitely are seeing it.
Definitely. And I'm glad you mentioned the law, because some people were saying. Comments that I've seen is like, well, that's racist. Isn't that against the fair housing laws? But you're the first person who ever said that. Like I saw you say it on another show. Shout out to Dave Ball, by the way. Make the connection. But
oh yes, sir, my guy Dave.
It's not racist and it's not illegal. It's within the law. And to your point, it's like we know the history of our community. Like we've been boxed out of this thing, and there are a lot of programs out there, low down payment, no down payment, whatever. But this, to your point, it's the first one for us specifically. So I think it's a great thing.
Yeah. When we had that thought, we knew this would come up.
Yeah.
We talked to our legal team about it.
Mm-hmm.
We talked to our friends in government about it too.
Yeah.
And what they said was, FHFA already wrote a piece about this in December of last year, telling lenders this is a legal program to do.
Yep.
And then HUD wrote their piece about it as well. Fannie Mae and Freddie Mac wrote a piece about it too, basically telling mortgage lenders and financial firms that this is something that you could do.
Mm-hmm.
But it always takes one to have the boldness to walk through the door and take the arrows so you can go back and tell people what to expect.
Yep.
But at this point, brother, we're at a point in time where we are at critical mass right now of this need. We, for 50 years, were told that through our parents that the way to create wealth was through education. And many of us went down that path, and we are looking back and we're seeing a mounting amount of debt.
Yep.
We're seeing higher incomes, but we have limited cash. Let me give you some context on this.
Yeah.
The current commissioner report in 1967, LBJ, after the riots in 67 in Detroit and Compton, these race riots, the president basically organized a commission within Congress to write a report about what's infuriating black people in this country to rise up with so much anxiety and frustration in this country. They produced a report, landmark report, called the Current Commissioner Report. And they said that it was the lack of economic mobility that was creating this sour taste for black people across the country. Now, at that time, the average black family had $6,500 of wealth. But if you count that for inflation today in terms of buying power, that is $57,000. Today, the average black family has $24,000. You tell me why 50 years later, black people today, through all of the advancements that we've made, have half the wealth that we had prior to 1968. That is a problem. And the reality is that we're not playing any games about this, okay? This is personal for me. I have daughters, I have sons, I have nieces, nephews, but we all have nieces and nephews. Mm-hmm. The reality is that it will be a disservice to our ancestors that this generation did not do all that we could and pay whatever price we have to pay to progress so we could have something better than what we have today. And so whatever people say, from my vantage point, it's white noise.
Yep.
We're focused on doing the mission.
Definitely. And speaking of the mission, I was reading that I believe it's a 30% homeownership gap between blacks and whites. And also that the company has committed to, the goal is to lend $1 billion next year and then $1 billion each year thereafter. Can you talk a little more about that?
For sure. That's a good question. We got to unpack that one too.
Oh yeah.
You got me pumped up, man. Started, bro. Like in the layup line still.
Yes, sir.
So first context, Legacy's Home Loans, our goal is to lend $1 billion by 2023. So what that means for us is that we started in 2019.
Yeah.
We've lended so far about $650 million to our community. So 350 more to go to get to $1 billion.
Got you.
So $1 billion in total
Got you.
by next year.
Yep.
But after that, $1 billion every year after.
Got it.
That is the goal. And I love that goal because ultimately what we're doing at Legacies, we are disrupting an industry right now. Nobody believed that you could build a national footprint where you're focused on the African-American prospective homeowner as your premier client. To give you some context on that, according to HMDA data, about 7% of home loans in this country go to Black people.
Wow.
We're 78%.
Wow.
And so we are proving the doubters wrong, number one. And I think number two, to that gap, I find that so unique because if you go back to that time, through all the programs, through all the new policies since the 68, home ownership for Black Americans up until recently was the same. You had a 42.5% home ownership rate in 1966, and in 2019, it was still 42%. Somebody has to think about, what the heck is happening?
Yep.
This is like, what kind of wool are they putting over our eyes? But I can tell you something, a legacy that we've noticed, which nobody talks about this, so I'm glad you asked that question. And that is that in the last 3 years, even to this podcast, here you are, a brother who is basically committed to financial literacy, education, real estate, but now there are many versions of you. The amount of content that's being created around financial literacy and wealth, and the amount that's being consumed in our community is speaking to a new awakening within our minds.
Yep.
Here's why that matters. Because if you look at 2019 home ownership, quarter two to quarter two of 2022, would you believe me if I told you that in the last 3.5 years, the largest increase in home ownership is in Black Americans?
Really?
If you go back and look at white households, percentage of ownership was 73.2%, then it went to 74.1%. It was a 0.9% increase. Hispanics, that same time frame, 0.9%. Asian Americans, 0.9%. Black families, 4.1% increase from 40.9 to from 40.3 to 45.2.
Wow.
Keep this in mind too. In 2014, there was 170,000 Black families that became homeowners in that year. Last year, 385,000, which means that every single year since 2014, homeownership is increasing every year. Look at market share. In 2014, Black Americans they had 5% of all mortgage loans in this country. Last year, almost 8%.
Wow.
Nobody's looking at that emerging opportunity because most people are academics.
Yep.
They can only give you data after it already happened.
Right.
But you and I are seeing it. We're living it. And so that gap exists, but people are also waking up. And I'm seeing clients across the country. Legacy Home Loans, we have 13 markets open, like 13 branches across the country, licensed in 44 states, 47 employees, 37 loan officers. And you can hear the conversations in Maryland, in Memphis, in DC, in Atlanta, where people are like, you know what? Let me actually learn how to budget. By the way, credit scores for Black families, for the average Black homeowner, every year has increased since 2014. So nobody's seeing the opportunity. We are. Does that gap exist? Absolutely. But so does momentum.
Yep.
And the fact is that we see it and we're going to grab market share.
I love it.
Very pumped, man.
I love it. I feel like I'm at a basketball game, man. I'm getting excited.
I told you, bro. I told you.
Oh, man. We got to go to the court after this. But
I got my shoes in the car, man. Let's do it, man.
I love it. So something else that I've heard, which I think is completely misguided, people are saying, well, programs like these, that's how people end up upside down or with no equity and stuff like that. But if you think about it, there's all these other programs. You have FHA, which you could do as low as 3.5% down. You have a number of 0% down or other lower down payment programs. And you just mentioned that y'all are doing the 1% down payment, but also there's a 2% grant. So can you talk a bit more about that?
Yeah,
and
100%.
Also the equity piece?
Yeah, for sure. That was a lot that was really important to take. I want to come into that too, how that works. So more context. This program is going to just start in the next 2 weeks, right? Which means that we've helped 3,000 families not using that program.
Yeah.
We have 100 loan programs.
Wow.
Right? So, I mean, we have done deals for actresses and celebrities buying properties for $5 million. We've helped the attorneys, the doctors, and the first-time home buyer single mom. So it's really trying. It's a full-service mortgage company. Number one. Number two, according to the National Housing Coalition, there are 2,500 down payment assistance programs. See, what happens is federal government allocates dollars and they give it to the states, who then give it to municipalities who create these programs. So every city has a version of these programs. And so it's been around for 30 years.
Right.
Number one. And so ultimately to that point, whoever you mentioned talks about it, this is how these programs help you go upside down. I think whoever says that, they have a misunderstanding of real estate by itself. Real estate is a long man's game to build wealth, or a long person's game to build wealth. Real estate is an asset that you hold on to 5 or 7, 10 years to really see the equity materialize. If you think you can buy a property for 1% and then flip it in 6 months, this is not that kind of market, not that kind of deal. And so I think whoever says that should read their history about how equity appreciates within history. But to the program, so the person brings a tradition. So let me do this a different kind of way. So this loan program is a traditional loan program. The difference is we're helping out.
Right.
And so, for example, if you were to buy a property today with, let's say, Fannie Mae or Freddie Mac, if you're buying, you could buy Home Ready. It's a Home Ready product they offer through conventional financing. Fannie Mae, Freddie Mac offers a possible called Home Possible, right? So if you qualify for that program, it's a 3% down payment. It's really that kind of product.
Right.
The difference is that we're giving 2%
Right.
of the 3%. And so ideally, I would tell you our objective is not for that borrower who has only 1% to buy that property.
Right.
We are very much so about building wealth that you can sustain over time. And so for that end, we educate, we advise, and we guide our clients. So I tell a client, look, even if you had that 3%, this program works, leave that $10,000 that you have in the bank.
Right.
Because once you go from renting to owning, that roof issue, that plumbing leak, you're the landlord of that property.
Right.
And so we help our clients get educated on what is the cost of maintaining the asset, not just getting into it. That's the beginning. And so we're proud to say, man, that in our time, we've helped almost 3,000 families, 0 foreclosures.
Wow. Say it again.
Yeah, I'm going to say it to the people in the
need
back.
to hear it again.
3,000 families, 0 foreclosures. We've created over $100 million of wealth to our community. This happened before this program even existed. We've been doing the work. And so ultimately for us, it's really about how do we help our people strategize on how to acquire an asset and be able to maintain that asset. And so you can have it long enough to build the wealth.
Definitely. So I like the piece about advising them, and I'm glad you explained it fully, because it seems like some people are under the impression that it's 2007, 2008, and if you have a pulse, hey, like people's mind goes back to that, but you just explain how it works. That's not what it is. Like, it's not to your benefit. It's not to anybody's benefit to approve somebody for a mortgage that they literally can't pay. Everybody loses in that situation. I think it's important for people to understand that.
Man, that's such a great point. See, most people's experiences tend to be lived experiences.
Right.
And so all people have as their own experiences 12 years ago.
Yeah.
So I understand the thought process. A lot of the time, I spend a lot of my time talking to people about historical context, okay, of this. 2007-8 was truly the only time that an economy crashed because of real estate and the housing market, which was really created by toxic loan programs that essentially had no oversight. And there's a concept on this in 99. They ended up passing a bill called the Glass-Steagall Act, which basically allow banks to provide capital without any oversight, which is why they basically pushed the need for more mortgages. Their thought was in 07, people always pay their mortgages. Look at the last 100 years. Get people into a loan and they'll figure out to pay their mortgage. That was the concept by bankers and institutions, which is why the entire economy betted on you and I paying that payment, because the default rate over 100 years historically has been like 2%.
Yeah.
So like out of 100 people, only 2% aren't going to make it. Give them more loans. They'll figure it out.
Yeah.
That's lack of oversight. That's lack of responsibility. This is not that market. As a matter of fact, give you some context. In the crash of 08, nearly 1 in 2 homes were like an adjustable mortgage.
Can you explain what that is? Oh,
yeah, 100%. Which means that usually if you come to me as a lender, I say, I'm going to give you this home loan, and this is your payment for the first year.
Yeah. Right?
And that payment might be $1,000 a month for easy math. But the fine print says, well, after 1 year, it's going to go to $2,000, and then in year 3, $3,000. Wow. The payment increases. But don't matter. Houses are keep going up. You can refinance in 1 year and you can get out that loan. That was the selling point. So no matter what you made in income, get into it and you can refinance out of it after year 1. That is a adjustable rate mortgage. So you had almost 1 in 2 of those loans in the marketplace. Wow. Right? So imagine what happens when you can't refinance in 18 months. That is the crash by definition. Today's marketplace, 95% of the mortgages in the marketplace today are 30-year fixed loans. Yeah. And 80% of those notes are under 3.5%. Yeah. Which means that the 80%. Rates, means that the market might be now 7% on mortgages today, but the current homeowner's average mortgage, the average rate today is 3.5% for the mortgage holder. That's why nobody's refinancing right now. Why do I refinance when I got a 3.5% interest rate? Right. Which means that affordability is not only that, but also the loan to value right now, which is how much equity you have in the property. If you look at all Americans, the loan to value is under 35%, which means that the average American has almost 60% of equity in their property. Wow. So for every 100,000, they got 60,000 in equity, 40 in debt, which means that the mortgage banks and lenders are incentivized to make sure if you happen to if you can't make a payment, you go into a forbearance plan. Yeah. And they'll give you 3 months to figure it out. And after 3 months, they'll put that how much you owe on the back of the loan because there's so much equity in the property. This is not 07.
Yeah. Definitely. Hey.
Hey, you're all welcome.
So how does somebody qualify for this program? Like what are the qualifications for it?
Yeah. So relatively simple for most lending guidelines. Like it's not a new product really. It's just we're giving 2% of the 1%. That's really the difference. And so how does somebody qualify for a home loan? Usually for these programs, a few things you have to know. One, the credit score has to be at least 620 or above. So FICO score, credit score, 620 or above, number one. Number two, job stability. You want to be on the job. If you're self-employed, at least 2 years, filing tax return, self-employed, or be on your job full-time for 2 years is a general rule of thumb. So job stability. Number three is your debt-to-income ratio. So usually this program, like any other conventional program, has a 50% max debt, which means that if you make, for easy math, $10,000 a month gross before taxes, your mortgage payment or your housing costs, so mortgage, property taxes, home insurance, PMI, private mortgage insurance, your student loan monthly payment, your credit card payments, any of your monthly bills, your monthly that shows up on your credit report, cannot exceed 50% of your gross pay. Got it. So somebody who makes 10 grand a month cannot have more than $5,000 in monthly obligations. Got it. That's debt to income ratio. Got it. Only thing over and above that is in the last 3 years, no short sales, no bankruptcies. That's really the mortgage lending process by and large. And then obviously having your 1% to qualify for that property. If you buy a property for, let's say, $500,000, you'll need 1%, so $5,000 for the down payment, and you still need to pay your normal closing cost.
Got it.
So today in this marketplace, closing costs across the country is about 1.5–2% of your purchase price. So for easy math, if you buy a property for $500,000, let's say, so you got $1,000 on the down payment, so I mean 1%, so you got $5,000 there, and then 2% in closing costs. So you need about $15,000.
Got it.
To buy that property for $500,000 with these other factors I mentioned to you just now.
Got it.
How it works.
Got it. Is there a requirement for reserves at all?
Great question. No, we basically go. So when we run the file in our back end system, we run it. So any lender that you come to, usually they're going to run your file once they have all your income, credit, and assets information. They're going to run your file what they call a desktop underwriter, which basically like is an auto approval. So as long as you get an auto approval with no reserves required, you won't need them.
Got it. Got it. Makes sense. Are you nervous about anything as this program rolls out in the next couple of weeks? Is there anything keeping you up at night?
You know, not nervous, honored. Honored is the word. And I feel like this generation, because that question I think about a lot in terms of how honored I feel, we feel. You know, I feel like this generation, we are writing the chapter for tomorrow with the blood of our ancestors. I really feel that in my core, man. And the fact that we're doing something, even the fact that people are calling it divisive or whatever the case might be, that is the price to progress. And honored is the word.
Love it. Love it. Another question I have that's come up in comments and stuff, is this program so to be part of this program, do you need to buy in a certain neighborhood or area, or is it open?
Correct. Yes. So I mentioned those 6 cities.
Well, I guess within those 6 cities.
Yeah. So it is based on zip code. So basically, we did the math on this. Basically, 80% of the zip codes in those markets qualify. So what happens is you would come to Legacy Home Loans, and you would speak to one of our loan officers. You can go to Legacy. You can go to myhomelegacy.com and follow us on Instagram or any platforms at My Home Legacy, and you can choose the option to speak to a loan officer. You say, hey, I live in these markets. Do I qualify? The loan officer will look at your zip code, put it in their system, and it will show a match.
Yeah.
And if there's a match, you qualify in that program. But the beauty in that space, though, to that point, I'm glad you mentioned that part too. What makes that product unique is not only can you use that program to buy in the city, but if you are a renter in that city, you can own in that city, or you can move to a different state and use that program too. You see, the aim is to get the renters in that market who we know have been redlined to get them opportunities to own. So it's about the renter in those cities. So as long as you have lived there, you've been a stakeholder in that community, you can own where you stay. There was a time, that the black doctor and the black teacher lived in the same community. There was a time that the bus driver and the attorney lived in the same community. We would love to keep that fabric together. But, if you have relocated because people are not working remote today, and they want to move somewhere for better taxes and better weather, or they want to move to a different city, that person deserves to own a home so long as they can qualify to do so. So they can actually, it's about, for clarity, the renter in those cities can use that program anywhere in America.
Got it. So to be eligible, you have to live within a certain zip code.
In those zip codes.
And then you can,
cities.
And then from there, you can buy in that current city, or you can utilize the program to move to some other city.
Absolutely.
Wow. That's very unique.
Come on. I'm saying, again, you just think about it. That's why I said it's an honor, because you sit back and say, okay, not only will we redline, we would block out the game, But then you saw eminent domain take place when they basically broke up our communities.
Yeah.
You saw white flight, right? You saw us restricted to live in the ghettos. Why not create a program that liberates that as best as we can?
Yeah.
And so if you want to live somewhere else, if you live in those 6 markets that have historically been redlined, we want to help you become a homeowner in that market or somewhere else.
Love it. And is it restricted to like single family homes, or can somebody get a multifamily home? How does that work?
Good question. On that 1% down payment, it is for 1-unit properties.
Got it.
So single family homes, townhomes, and condominiums.
Got it. So if someone wanted like a multi, they would just use one of your other programs.
Correct.
Got it.
Yep. Which is traditionally, your FHA product.
Mm-hmm.
Freddie Mac has a great product called Home Possible, where you can buy a multifamily on a 5% down payment.
Yeah.
That's been around for years. And then,
Love it. So I want to talk about starting the company with Ben Slayton. I did hear you talk about, I won't spoil it, hear you talk about how he found you and just getting this started. So talk to us about that. I think that's a really, really cool story.
Yeah, absolutely, man. And it's so interesting. That's why like I really sit here with you talking about this journey. Like it really is an honor.
Yeah.
Because sometimes you have a plan and then God has a bigger plan for you. So I'm gonna give you some context here.
Mm-hmm.
I was a successful mortgage banker. And I started my business basically as a loan officer in Santa Monica, California, which is a predominantly, white area. I was, aggressive, hardworking, persistent, a lot of character, a lot of skill. And I built a referral-based business,
Mm-hmm.
helping people utilize strategies on how to look at guidelines to accomplish a goal. So a family has equity in their property, self-employed, movie producer, but they want to buy a property, they have a down payment. I knew the guidelines to help them structure a loan program to make it happen.
Mm.
And so that's how I built my business in that model. I was that guy on strategy. And so, but I was in Santa Monica. And so the transactions were like handshakes, like, thank you so much. But it was just a business transaction.
Yeah.
But I'm from South LA.
Mm-hmm.
And so around 2012, I started posting on social media. So I got friends and family. It was like, hey, my mom wants to buy a property, my high school friends. So there was a lady, her name was Elcido Bradley. And Elcido Bradley was the first person who I had met like about 11 years ago. And she was the first person who I actually have seen who had equity in her property, but she used the equity in her property, her first property, and then she used the equity to buy another property. And she sent her 3 boys to like Xavier and Howard.
Wow.
All leveraging real estate. She was a RVN. She was a nurse.
Wow.
First time I've actually seen one of our people leverage the asset. And I said, this is amazing. Everybody should be doing this, leveraging real estate.
Yeah.
So I started teaching these classes on like leveraging real estate and how to do it in South LA, and it just went crazy. So in 2015, I wrote this initiative where Nick Gouché in LA, I wanted to create $100 million of Black wealth in the LA community. So I wrote this whole white paper, 42-page paper,
Wow.
like 7-8 years ago.
Wow.
But what it did was it basically built up my notoriety because I was already a big producer, but I was producing on like impact, purpose, mission, driving bigger outcomes. And it just made me a big producer. In my career, I've done $527 million in self-source production.
Wow.
1,200 Black families in LA is because I helped them do it. And so it built a word of mouth campaign under that initiative.
Wow.
It's important because 4 years later, when Ben was building his company, he went to Google and he put like Black mortgage lender. And when he went to images, your brother popped up and that initiative.
Yeah.
And so Ben told me about his mission. And so I built a local crusade. He wanted to build a national crusade.
Wow.
Right? Same vision, different scale. And so initially I looked at, and even that's why I love this journey, because even I didn't think it was possible to do it at scale. I'm like, I can do it in LA.
Yeah.
But to try to build a company nationally around the Black homeowner, I don't know if I can do how this is possible. So initially I told him no, because my own limited beliefs,
Yeah.
which is why no man could be bigger than his thoughts. And so so when I told him no, But then we're talking, and he said, "Hey, what church do you go to?" And I'm a spiritual person, more spiritual person. And I go to this small little church, man, in LA, like 200 people. No way, there's 10,000 churches. And I said to church, and coming to find out, Ben grew up in Judaism as a Jewish man.
Okay. But
he got converted 20 years ago, before that, at my pastor's church.
Wow. No way.
And when my pastor, Pastor Ron, when he was an assistant pastor at a church, and when he went on his own, he had his first sermon in Ben's garage in his home.
Wow.
And so when I called my pastor, he told me the story, and I was like, okay, God, let me, I know I have my plan. Let me listen to your plan. And when I had clarity on vision and I had the faith and belief, I said, let's do it.
Wow.
It's crazy, right?
That's amazing.
I know.
What, so it's been about 4 years, right?
Yeah. About 4 years.
600 and something million, you said?
650.
650. So when you think about that moment, right? Like, you said no, and then obviously you reconsidered. How does that feel when you think about the journey? I don't know how often you sit and think about that turning point and where you've come now and what's ahead with this program and everything else.
On my own, this business has made me personally a millionaire doing this business. You know, I got multiple properties in the LA market before I came to Ben. This was already. But when you take out me and replace it with we, remember you said, do I feel nervous at night? I legit sit up at night and be like, what a journey.
Yeah.
Like, tough. Building a mortgage company, a national mortgage company, it's a lot of work. This is a lot. It's not easy. But paradigm and perspective makes it much easier because I have a different view of the historical progress and sacrifice of our community. And so honored, bro, like legit, like I wake up and look, not every day is the best day. There's you owning the business, there's ebbs and flows, man. But it's like, bro, I look back and be like, God, thank you. And I'm also thanking myself too for listening to that inner voice within. Many of us have genius ideas, great opportunities, but many of us don't say yes to the vision. And you know something for you to do, man, that's bigger than yourself, but you can't get out of your own way sometimes. And so I look back and like, this is great. Yeah, man. Definitely.
Love it.
Yeah, it feels good.
So I know you've been traveling a lot. Have you been, has that been like, you know, taking interviews and stuff, or has that been like, what's the recent travel been about?
Yeah. Expansion.
Yeah.
Expansion. Man, look, I just got back from a conference. The mortgage industry is expected quarter over quarter, which means the market is expected to shrink from, let's say, what's that, July, August, September. Usually the last quarter, you know, people go on vacation, winter, holidays. It tends to be seasonality, like a lower market, but it's expected to be a disaster of a market this quarter.
Wow.
For the entire industry, the market is shrinking, right? Higher rates, limited inventory. Builders aren't building because the actual supply and the demand has actually gone down. The number of buyers walking into homes for open houses has shrunk quite a bit. And so they're expecting a bloodbath. And here we are, a black company expected to like have meteoric expansion in this quarter, which is only on God's plan. And so for me, I was in Chicago meeting with teams. So right now I'm recruiting. Gotcha. And so I was in Chicago last week because I'm looking to now grow. I was telling somebody on this call today, have you ever seen the Avengers? You an Avengers guy?
No, I don't think I've seen it.
Come on. You're playing, dude.
I haven't seen it.
This guy serious?
I haven't seen it. I don't think I've seen it. I'm pretty sure I haven't seen it.
Hey, man, this guy. Fine. Yeah. No, that's all good. No, but so Samuel Jackson, you know who he is, man?
Yeah.
All right,
I know Samuel Jackson.
Gracious, dude. Goodness gracious. So Samuel Jackson, he basically plays a role called Nick Fury, right? And Nick Fury is like for S.H.I.E.L.D. And SHIELD is like the protection division of America that like goes and finds superheroes like Iron Man, Thor, are all found through Nick Fury.
Mm-hmm.
And he goes to find these leaders. I feel like right now I'm Nick Fury.
Yeah.
You know what I mean? So it's like right now, like, dude, I'm looking for people with like shared vision, shared mission, shared purpose, shared commitment, shared value, shared mission. It's like this company exists. And if you share what we share, let's build this thing together.
Yep.
Let's dispel all the stereotypes that Black people can't build together. You know, let's take out all the tropes that we say, you know what, that was true then, is not true today.
Yeah.
And so, yeah, I mean, I was in Chicago. Then I was in Memphis. Then I was in Atlanta all last week. It's like Wednesday, Thursday, Friday. And then I just met with somebody here. And then I'm leaving tomorrow morning to go to Vegas to meet with a team there, then Shreveport, Louisiana. And so it's like we have people's awareness who did not know that we existed. And so my job is, as a leader in this company, is to help serve their missions within ours. And so most of it has been recruiting.
Definitely. You mostly hiring mortgage officers or?
Correct.
Okay,
yeah. So
cool.
no. Like right now, I'm looking to hire regional managers.
Okay.
Regional vice presidents. Our mission, Legacy, is more of a platform that empowers leaders.
Yeah.
And so for me, like, you know, in those markets, everybody has a different kind of flavor of how they do business.
Yeah.
So my job is to find that local person, that local hero in that market, support them with resources to grow that market.
Yep.
And so I'm looking for leaders and be service of them, and they can go and grow the market.
Love it.
It's been crazy, man.
It sounds
like
the
next 2 weeks, though, we'll be doing a lot of home buying workshops, meetups. It's crazy right now.
Yeah. You got anything coming up in LA?
You know, so because I'm from LA.
Yeah. You probably get like 1,000 people to snap a finger.
100%, no, seriously.
I believe seriously.
Yeah. We're going to do. We got a lot coming up. We're going to do like a legacy tour across the country.
Nice.
Be partnering with like influencers, people like you, because you're big time too. So we're gonna make sure.
Hey, however I can help.
No,
man.
seriously, bro. But it's just so yeah, a lot of recruiting right now. Then we got to go to DC. Some people, housing policy makers.
Mm-hmm.
Matter of fact, the last thing too, it was pretty cool because a really key stakeholder in policy in DC was at a conference in Houston. So last week there was a conference in Houston called the State of Housing in Black America, the SHIBA report. The SHIBA conference is put on by the largest organization in America, focuses on democracy and housing, called NARAB. NARAB is a trade organization. And the individual there said there are many lenders coming up with SPCP programs. None are more committed to solving the problem than Legacy Home Loans. And Lauren, you know, she's an ally. She's a white woman, VP of another organization. But we have the nation's attention. And my job is to maximize the opportunity.
It's time to capitalize.
Come on, baby. If it's not showtime, it's showtime, right? So it feels really good.
Definitely. So Nick, you've had tremendous success individually as a leader in this organization, co-founder. And I know a lot of people watching this episode, you know, maybe they're mortgage, maybe they're in the mortgage industry. Maybe they aspire to be successful in their cities and make the impact and build homeowners and things. So what is some advice you can give to somebody who's in that position, who wants to go up the ranks and succeed within the mortgage industry?
Great question. One is, I think this advice is for any entrepreneur or just anybody who wants to make a difference. You have to really have a deep commitment to your craft. Nobody has enough talent to outpace work ethic. And so you got to fall in love to whatever you're doing. Because there are some people who might be in the business by title, not by purpose. Two different things, right? And so if you have purpose, you're committed to your craft. So whoever that person is, if you're not putting in those 10,000 hours, the market will suck you dry. And somebody like me is going to come take you for lunch. And so you got to have commitment to your craft, I think, number one. I think number two, you got to play a long game, okay? It's about a great career, not a great month, okay? And so for us, I'm not chasing riches. I'm chasing wealth. Wealth is a long game, so reputation, character matters. Keep your word. Real estate is still very local. So somebody in that market, I would tell them that you should have a reputation that's strong as your name. That your name is your brand. So when I see Black Real Estate Dialogue, that is your brand. My name is Nick. Anybody who knows Nick, he's a brand. So that person who it might be in DC or Houston, wherever they are across the country, I would tell them to have a strong passion for what you do. Be serious about the work, the Mamba mentality. Mamba's like, that's like the guy,
Yes,
right?
sir.
Mamba's the guy, and have a great reputation. I think, and it really out-care and outwork everybody else. If you care about your client more than anybody else, they're going to feel that. And they're going to be loyal to your brand. And you will have exponential growth because your name will be in places you'll never be. You'll see somebody be in the house, be at a job, and say, I want to buy a property. You got to call my guy, Sam, because that's your brand carrying you when you physically cannot be there. And so I think to anybody who hears this, who wants to build something legendary, those would be some tips for me.
Love it, man. Love it. You know, I'm just sitting reflecting on the interview and just thinking about, you know, you talked about, you know, the conditions you grew up in and moving 20 times at a young age. And, you know, you've come a long way. So, you know, I know your family's proud and, you know, your kids and everything. And man, I really appreciate you taking the time. I know you're all over the place. So I appreciate you taking the time to have this conversation.
It's an honor, brother. You're doing phenomenal work.
Thank you.
I think we do all that we can to help support you as well. But this is mission critical information.
100%.
Like, I am not kidding. Like, I mapped that down, bro, legit, in less than 11,000 days. That's 30 years from now. It's like nothing. I can imagine my kids having zero. You have any kids?
No, not yet.
You want to have kids eventually?
I do.
I don't. Now, those are kids to be my nephew and my nieces.
Mm-hmm.
We can't leave them a life where they have no resources.
Yep.
And so the work must be done, and your platform is huge. So I thank God for you too, brother.
Thank you, man. Thank you. And Nick, lastly, where can people keep up with you, reach out to you, reach out to the company and be part of this program or any other program y'all have going on? What would be the best places?
The best place to do, I would say, is you can follow us on Instagram. That's a big platform for us now at Legacy Home Loans. Legacy Home Loans. You can follow. You can go to our website, myhomelegacy.com. At this point, you can even Google Black Mortgage Lender on Google.
Yeah, you're gonna come up.
We'll pop up too
with your face.
Like this. Let me like this. Nah, man, but I'm excited. And the last thing I would say is that if you are an African American or you're an ally of us as well, and you're looking to buy a property, it should be with Legacy Home Loans. Okay, if you're in this business doing this work, and if you have the shared vision that we have in those markets, we should partner together. And if you are if you're a Black real estate professional, if you're a vendor in the supply chain, there's no reason why we shouldn't be building an ecosystem that can help grow and scale as we do as well. So let's make history.
Let's do it. Let's do it. There you have it. There you have it, folks. Thank you again for listening to another episode of the Black Real Estate Dialogue podcast. Again, make sure you subscribe, like, share, leave a comment, leave a review, preferably a 5-star review. Looking forward to hearing from you all soon. Thank you so much.
Hi, everyone. Sam here from the Black Real Estate Dialogue. Make sure to hit that notification bell and that subscribe button and to visit us at blackrealestatedialogue.com.